Give us 30 minutes each week to discover the trends that are shaping the future of retirement with That Annuity Show. We bring you conversations with industry leaders who are revolutionizing financial products, technology, and distribution channels. Now, here's your host, Paul Tyler.
All right, and welcome to another episode of That Annuity Show. Bruno, glad to see you here.
Glad to see you here. Good morning, Paul.
Yeah, good morning. A little cold here. I'm sure it's getting colder up in your neck of the woods as well.
Correct, and yeah, that's an accurate statement. And but we make the best out of it.
All right. Yeah. Well, I actually hung out a little bit with some of your fellow Canadians here this last week. Zinnia, the company I'm working for right now, did an acquisition of Breathe Life, and we had your friend Ian here and some of the other crew. Very impressed with the skills of the Montreal group. So
wonderful. Yeah. No, we've heard of them, so I'm glad you guys are going to work together. That's great.
Yeah. Well, and anyway, we have two great guests, but in the spirit of it can't do anything without AI these days, is we actually have a little bit of an intro to run.
Hey everyone, welcome back. You know that feeling when you're drowning in retirement advice? Articles, brochures, everyone's got the magic solution, right? Mm-hmm. Well, we're diving into a whole different approach to retirement income today. We've got some really interesting stuff to unpack, even some insider documents that hint at how we might be able to get that feeling of a guaranteed retirement back.
It's fascinating, isn't it? This deep desire for that old school pension predictability. You worked, you retired, you got your check, like clockwork.
Yeah, the good old rocking chair retirement.
Exactly. But with the rise of 401ks, that certainty kind of went poof. And it's got a lot of people feeling uncertain about their future.
And it's not just us feeling it, right? Even Larry Fink, the CEO of BlackRock, talked about a major player in finance. But he said it straight up. This whole shift to everyone managing their own retirement has basically been a giant leap from financial certainty to financial uncertainty.
He hit the nail on the head with that one.
Totally.
And the numbers back it up. Get this. Over the past few decades, a jaw-dropping 56,000 employer-sponsored pension plans have been terminated.
Whoa, 56,000?
Yeah.
That's like a whole city's worth of retirement plans gone? No wonder everyone's feeling a little on edge.
It's a big deal, and it's a major reason why so many people are feeling lost in the world of 401ks and market volatility.
You're diligently putting money aside, hoping for the best, but then the market takes a nosedive, or interest rates plummet like we saw with that recent CD rate drop. It's enough to make anyone question if there's a better way.
It makes you wonder, is there any way to get back some of that pension predictability, even if your company doesn't offer one?
Exactly. And that's where the work of retirement planning expert David Macchia comes in. He doesn't mince words.
Not at all. He's got some strong opinions about the current state of retirement planning, and he's actually developed a whole new system to address these anxieties.
And he calls folks in this position, those of us craving that pension-like certainty, constrained investors.
Because, let's face it, relying solely on 401ks and hoping the market always cooperates.
Yeah, it's not exactly a recipe for a stress-free retirement.
Exactly. Macchia argues that most of us need reliable income in retirement, not just a portfolio that's swinging like a pendulum.
It's like trying to fund your retirement with a seesaw. Up one day, down the next. Not exactly the smooth sailing most of us are picturing.
Right.
David?
You've outdone yourself.
Leslie?
Well done. Well done.
Thank you very much for joining us. So, David Macchia, you've come back. You're a great CEO, founder of Wealth 2K, and well-known in the industry. Lesley Mann, welcome to our show for the first time, and you are Chief Marketing Officer for GBU Life, and have a really very interesting background. Welcome.
Thank you. Great to be here.
So, David, after all of this discussion about AI advisors, I had to try the latest, Google LM notebook with some of the materials. How did our two guests do? Could they put Bruno and me out of business here?
They're not going to put you out of business. I think they're going to enhance the program, as you've already done. But it's fascinating, isn't it, that can happen probably in a span of 4 minutes that gets created.
Bruno, what do you think? How should we be worried?
I don't even know where to begin. But to your concern, I agree with Dave. I think it's just going to enhance. I think it's the tedious work sometimes, like we do in putting things together. That's just going to be enhanced, and there's just going to be more time to think and discuss the common sense, the real issues, and how to do it. So no, I'm excited.
Yeah. So Lesley, welcome to our show, where we sometimes.
I'm a real person, by the way. It's just.
Yeah. So yeah. Before we cut into this, I mean, how would you grade an AI intro like that? I mean, literally, David's right. That took probably 4 minutes. I uploaded one of his brochures. David, I linked him to your webpage, and no, actually, the whole thing ran 12 minutes. I'm going to tell you, and yeah. So Lesley, before we kind of go into the meat of the show, I mean, what's your take and your company's take on AI and how it may or may not change our industry? And no, no. Well, just kind of shifting to the topic, though. Of course, AI has got to be in service of what? And David, I think you want to talk to us about your work you've done. I'd say pushing the concept of this constrained investor forward. What would be catch us up?
Sure. Well,
where are you headed?
Let me frame it this way, Paul. This week, I spent 2 days participating in the Alliance for Lifetime Income Summit in DC. And during the meeting, I walked up to a senior executive of a large insurance company. And I said, "May I give you a hypothetical?" And he said, "Sure." I said, "Someone approaches you and says that they have an invention that will reorient the financial services industry, solve America's retirement security crisis, and in the process, dramatically boost the fortunes of life insurance companies. What do you say in response?" And he said, "I need to know more." And I said, "Let's talk, because that's what we have here." And what I'm describing is something called defined benefit investor. As your introduction accurately stated, we lost 56,000 employer-sponsored defined benefit plans. Retirement security went down dramatically in our country. What's the solution? I believe the solution is millions of new defined benefit plans, but personally owned. So what we've done is we have a patent pending technology that will wrap around virtually any investment product that can be systematically invested in. So for example, Lesley will talk about defined benefit annuity, which is a flexible premium contract, which obviously accepts systematic deposits. We can wrap a system around that index contract that creates a defined benefit pension for the individual, where the individual, in addition to making the normal application and funding a contract with an initial premium, will say, "Look, at age 65, I want $100,000 a year. I want to contribute for 30 years. I think I can earn an assumed rate of, say, 5% long term, and I want to have income for life." Well, what will happen is this system will annually assess the actual performance of that annuity and then send an annual report to the client apprising them of how their contribution must be adjusted over that next year, whether it's upward or downward, to actually stay on track. Well, that's the exact economic methodology of a defined benefit pension, but now it's been brought down to the individual owner. And I believe that's going to change everything. At least I hope I'm right.
Oh, we all do. And to dwell on the topic, you don't need to convince me. But we've had a few conversations this week. Some of them were on LinkedIn as well. And there were some voices out there that made the point that income in 20, 30, 40 years is unpredictable. What's going to be needed? What's going to be the world out there? So that need to look at things from an income perspective is not necessarily beneficial. Now, you and I have a different view on that particular issue. Can you elaborate a little bit on
Sure.
Why it makes sense to look at things from an income perspective, and even if you're at the onset of your career?
If a Nobel Prize was given to a sentence, here's what I propose the sentence would be. When you retire, your standard of living is a function of your income, not your savings. I wish I had said that sentence. It was actually said by Robert Merton, who won the Nobel Prize in Finance. Everything is about income. To the extent that we can bring an income orientation to an investment product, for example, that has no natural income context, we are serving people splendidly. If you own a 401k, maybe there's some vague notion of income at some point if you have a certain type of offering available to you. But if you know that your 401k can be the accumulation vehicle that now becomes your lifelong retirement income security solution, your behavior with that product will be different. You will tend to put more money in. You will tend to put more money consistently because you know at the other end you will have an outcome that's lifetime income. I don't know who logically can disagree with that, because if you're the 401k provider, if you're the record keeper, if you're the asset manager, all this is doing is making your job better. It's giving people more incentive to consistently save and invest.
Yeah, well, Lesley, maybe you could talk about your company's focus and where it intersects with the work that David's been doing.
Yeah, I mean, I kind of to your point, Bruno and David, I think the concept of retirement, and you don't live on assets, you live on income. And to suggest otherwise is really kind of an interesting concept when you've got the Larry Fink, the largest the CEO of one of the largest asset managers out there, saying we haven't done right by people. So we've been thinking a lot about this. We're also looking to attract different demographics and have identified a real need in the marketplace, right? I mean, not only have pension plans gone away, but I think we're all very aware of where Social Security stands and whether that's going to be a viable option for that younger generation, Gen Z, Gen Alpha, in 30, 40, 50 years from now. And so what can we do as an industry, and certainly from our little perspective at GBU Life, what can we do to help people? And, David and I got together and really feel like this is an opportunity to get younger people involved in the process early and create this systematic savings plan that allows them to have some form of guaranteed income in retirement. There's also a really powerful statistic out there, and I won't remember where it came from, but there's people that have annuities and have guaranteed income are significantly more happy. So it's like 70% of the people out there that have an annuity are comfortable and happy in retirement because they know that they have income. So that's where it all started. Lots of conversations, and we came together to bring this to market, and we're days away from doing it, and it's really exciting.
Okay, well, we're going to use that as the cliffhanger because I'd like to go back to a couple items, Lesley, popped up. Larry Fink. Now, I think there must have been a Google event, like Google Zeitgeist or something. Somebody actually sent me it was funny. Talk about timing. A an iPhone video of Larry talking, and he says that if I hopefully get the statistics right, I think he said he was talking about longevity, saying how people don't really appreciate what it's going to mean if they live longer. And the stat he used was, he said, the average Social Security payment each year is going to be $26,000. That's living, and he used the words, living in poverty.
In their annual report. And
is it? Yeah.
That's a letter to shareholders, the annual report. Like that's the quote.
Yeah. So Lesley, if we just kind of stop there, now averages are misleading. I think, it can be, David, they say you can, drown in an average of, a foot of water. Clearly that's not always the case, but in your mind, I guess, do you think consumers understand that do they really understand what Social Security will and won't do?
Go ahead, David.
I'll let Lesley go first.
Yeah, I'm
going to reach for some stats.
Absolutely not. I don't think they do. For anyone to think that living on Social Security alone is going to be the answer to retirement, it's scary, right? And so that's where we need to help educate people and bring to market these products that help them understand that Social Security alone is never going to be the answer. It's really a three-legged stool, right? It's what it used to be. You had Social Security, pension plans, and then, your savings. Now you've essentially got your savings and 401ks, which are not a guaranteed income stream. And you've got Social Security for now, but 20, 30 years from now, is it going to be there? So I think the concept of a defined benefit annuity, creating your own personal pension plan, really will have legs eventually. I think it's going to take time to get people's mindsets changed, but I think it's something that will, over time, gain rapid adoption.
Oh, there's no doubt, and I still don't understand how much time it requires in order for the industry to get there. I remember starting as a young actuary, I started my career a few years back at Towers Perrin at the time, and that was mainly a defined benefit consulting actuarial firm. I was on the life side. It was called Tillinghast, but I was on the life side of it. So I was not dealing with defined benefit pension plans, but I followed the story from that particular angle. Of course, it was the firm's bread and butter was defined benefit pension plans. And being an actuary on the life side, I always taught myself that, so pension plans are going away, so the private market is going to step in, and what's the big deal? I mean, it's a very, it's a very efficient economy. Like what's the big deal? Like people are just going to buy lifetime income, and the private sector is going to fill in that gap. And why are we keep on talking about this for so long? And that story has continued for more than how many, we're talking about decades here that we're not there yet. And you mentioned that average. People don't know how long they're going to live. Moshe Malevsky, which is the one of the biggest brains around this concept, usually talks about his two hands, like one being in the fire and the other one being in ice. And on average, his two hands are in the appropriate temperature. But obviously, that doesn't tell you anything. But it's the same thing with longevity.
Let me offer an explanation, because it's been a frustrating thing for me, Bruno, for over 20 years. Give you a little history lesson. In 2005, my small company became one of the founding members of a nonprofit called the Retirement Income Industry Association. And the premise behind that organization was to have a view across the business silos, because we realized even then that in order to create the next generation of solutions that would be required to address retirement security, it wasn't about any single silo. You needed a combination of silos. You needed annuities, investments. You needed a joining together of these disparate worlds. And what we saw is that major companies, I won't quote them here, but major companies launched retirement income, initiatives with a lot of funding and big, backing by CEOs and high degrees of publicity. And they all failed. And the reason they fail is because the silos would never cooperate with each other. And this has plagued me for years. And this is one of the reasons I'm so excited about defined benefit investor, because what it does is create the retirement income context without asking the silo to change its job. Just be what you are, make the best products you can. We'll have an external factor that creates the retirement income for you. I think that's the importance of it in a nutshell.
Well, Lesley, do you want to talk to us about what you're rolling out?
Yeah, sure. David talked a little bit about it, but it's essentially wrapping this defined benefit annuity process around a flexible premium annuity that allows the member to contribute over time. And so, as David explained, up front, the agent or advisor will sit down with the client and help them understand what their needs are, what they're thinking about for retirement. Let's say they pick $100,000 in retirement. How old are they now? How long do they want to contribute? And so the system comes up with a calculation of what they will need to contribute to a plan of some sort over the next 20, 30, 40 years, whatever the time frame is. And so our annuity, being a flexible annuity, allows the member to continue to contribute and get to their goals. And each year, a report will be generated to monitor where they are, make sure they're on track, keep it top of mind, right? Because you want to make sure that they're focused and keeping this retirement income goal top of mind, because it's easy to see large sums of money in a savings account and want to do other things with them. So you want to keep this top of mind, that this is for their retirement, that they're on track for their retirement to do the things and enjoy the things that they want to do in retirement. So it was, we had a very unique annuity that we developed a few years ago. It's a short surrender charge. It allows them, like I said, flexible premiums to contribute over 20, 30, 40, 50 years.
Oh, well, this is interesting. I have not heard of a flexible premium annuity product coming to market for a long time. I've had a lot of startups come to me over a few years saying, "Can you build one?" But Lesley, you actually have one. Is that correct?
Yep. And it's a flexible premium fixed indexed annuity. It's built using Barclays indices, vol-controlled indices. We have an opportunity. The product has an opportunity to buy up the par rate. There's no caps. It's very simple. And the par rates can change, but because we're using volatility controlled indices, the expectation is that they will very unlikely change over the course of each surrender charge period. So we're excited about that, and we've seen really great success with it, and we've gotten a number of people to do modeling around the predictability of the indices, and we've had numerous people say it's one of the best index annuities out there in the industry. We just brought it to market about 6 months ago, so we're still getting the word out there. But it is very unique, and like you said, there aren't too many flexible premium indexed annuities. And it works for both the client and the advisor, because it's a repeating surrender charge, the advisor continues to get paid and is incented to, keep the money in place for the reason that they, purchased the product in the first place.
Yeah, well, that's okay. So a couple of questions. One is, and maybe you could tell me otherwise. I bet this opens up a whole different market of consumers to talk to, because I think most of our advisors are used to talking to somebody who's 67 or 68, does a huge rollover. How have you had to change the conversation? Who are the people they were selling what before, or these are people who are selling annuities too much older set, now they're able to take the conversation lower? What's the go-to-market approach here?
Yeah, well, I think that's a great question, and I think we're on the beginning of that journey to change the conversation, right? It's to help advisors, young and old, identify that there is this generation and you look at that millennial generation that they have a lot of money and they have a lot of money coming to them with, the transition of wealth. And so this is a big opportunity. But it is a change in the conversation, and it's not something that's going to catch on, I don't think, overnight, because as David and Bruno, you've just talked about, nobody is really on board yet with the concept of needing retirement income or replacing the, a defined benefit plan. We're getting there. We're starting to hear more in the industry, but this is going to, to me, this is a slower burn, if you will. It's going to take a while to educate and market and change the conversation. And that's what we're trying to do, with this whole concept and, with our marketing and how we're thinking about going after a completely different demographic.
So assume car insurance didn't exist. And some people had the idea of pooling funds together with small premiums and redistributing those funds in a way that someone who has a car accident can benefit from these funds so that everyone can have some sort of peace of mind whenever they drive. I think people would think that it's a very far-fetched concept, but once it's actually implemented, people are probably going to think that, how were we living without car insurance before this? Do you believe this is going to be the actual mindset with retirement income, with lifetime income, with guaranteed or protected lifetime income once all of this is going to be in place?
I think so. I mean, I think David believes that passionately too. Something has to change, right? I mean, something has to change. Let's just use an example, right? You've saved for 30 years, you saved $5 million. You decide on September 30th, you want to retire. December 31st, you wake up and there's a market crash and your account is now worth $2.5 million because there's absolutely no protection, right? There is no guarantee on asset accumulation. So that is where an annuity, which, by the way, Social Security is essentially an annuity, where an annuity comes in. It guarantees you, certainly in the index annuity, guarantees you a floor. You're never going to lose money, but it most importantly guarantees you income. That is the risk the insurance company takes on and guarantees to you as the investor that we will pay you for your lifetime. So you can rest assured we're going to be here and we're going to pay your retirement income and you can live like you want to in retirement. So I think that's going to resonate, but it's going to take time, right? It's a different story.
David, how do you change the conversation?
Well, I think there's actually some tailwinds to it. If you look at the stats about the millennial generation, up to 75% of them believe that they're never going to get the Social Security they've been promised. But let me share something that came out of the ALI meeting that was really astounding to me. Senior executives, company CEOs, major company CEOs saying that we need to change the terminology. We need to use terms like private pension, personal pension, and we need to go to the regulators to reform their thinking about this so that we can put products in front of consumers that are more accurately described and more relevant to what they see their need is. I thought that was a remarkable thing and a very healthy thing.
Well, and you and I, David, had that very conversation because I really liked the concept of marketing this as a personal pension plan, but the regulators don't care for the term. And so I think it is an educational opportunity to change their minds around it because it really isn't, it is an accurate way of describing what an annuity and especially ours can do to protect someone's and provide a pension for them.
You're totally right. I mean, you can't objectively look at defined benefit annuity and say that it isn't a private pension.
Right.
Right. It's unfortunately, I think sometimes being legally precise actually makes the information actually not comprehensible
Right.
for a normal person.
Agree.
Yeah.
Well, it's. I think there are a lot of kind of interesting opportunities and problems as we start to reach sort of a younger generation, Lesley. Because what do you do to supplement your pension? There's not really an easy answer. Now, if you are lucky enough to have a 401k and that provider offers some sort of an annuity inside of your 401k, that's probably the closest vehicle we have today. We just did a survey. It's interesting. I think we'll release this in a couple of weeks. I mean, confirmed a lot of stuff we've seen before. So the survey response said, if you think you're going to live to age X, how confident are you have enough money? Well, what if you live 5 more years, 10 years? Well, of course, confidence falls. Now, it's interesting for the people who had an annuity, their spread was maybe 20% better, much more confident. Here's the bad news. There's only 9% of the people in the survey actually said they owned an annuity. So what an opportunity there. Now, the other one, I think more relevant to the market you're going to, like half those annuity producers or annuity customers said they just really didn't like their online experience. It was, I think we had like 47% or something said the online experience was not satisfactory. If we go younger and target a younger audience, Lesley, how much change do you think we have to make on the back end of systems?
So a lot. I mean, lucky for us, here's the thing. We were not a particularly tech savvy company about 5 years ago. And so we have the luxury to a certain degree of not having a lot of legacy infrastructure that we need to deal with. And so, over the next several years, we are going to be making large investments and changing the whole digital and customer experience to really target that demographic that we're going after. Do I think that, someone coming into our ecosystem now is going to get the experience they absolutely want? No. But you make a terrific point. Like, that is absolutely our focus, is creating a much more digital, friendly opportunity for that demographic, because they don't want to talk to someone for a very long period of time. Ultimately, an annuity is sold through usually an agent of some sort. We all know that direct-to-consumer annuities and life insurance is a challenge. It really hasn't come to fruition. And we don't really think that that's the way to go here either. But you do need to have transactions available online. It's all table stakes, right? I mean, I know for myself, and I'm not a millennial or a Gen Z, I don't like to talk to people. I want to be able to do it online. So that's what we need to facilitate. And we need to have an app that someone can go into, get their balance, do what they need to do, and move on with their day. So, we are investing in that, and we'll be, rolling out a whole host of new opportunity, technology to meet those needs.
Paul, may I just interject one important other issue here that creates some tailwinds for us, and that's women. We have the phenomenon that we can't ignore of women inheriting as much as $20 or $30 trillion. And the investing preferences and objectives of women are misaligned with what the financial services industry has been serving them up for many years. And so this creates an opportunity to, bolster the annuity business, including around the system that we're talking about here today, to be able to bring definition around someone's retirement goals and have them systematically fund to that definition. Even if they're 3 years, 4 years, 5 years away from retirement, doesn't matter. They don't have to be 40 years away. But it's getting them focused on that defined level of income and realizing that income that I think is so important.
I agree. I think that's a terrific point. And what's that statistic too, about 70% of women move away from their husband's advisor, right? Because they don't trust them to do the right thing for them in retirement.
Yeah, you're fired, Bruno.
As I should be. And I think there's a lot to unpack here, but I do want to go back to Lesley's point earlier on being available to transact at maybe lower amounts, or not necessarily having this extremely emotional sale of having like an annuity agent saying, okay, well, here's your $200,000 annuity versus ability to transact multiple times. The whole concept of dollar cost averaging for mutual funds, I mean, that's important for annuities as well. I mean, it's a different market, but there's a lot of similar comparisons. Can you talk a little bit about where this is going? Some sort of potential improvements you have made, or new grounds there that can allow people to to have that relationship, but can transact over a longer period of time.
Yeah, the annuity has a lower, I'll call it barrier to entry. The product that we're offering through the defined benefit annuity program, it is, on paper, on marketing, it's 10,000. But we we recognize that if someone's starting an IRA, that those amounts could be lower, and so we do have the availability to take less than the 10,000 to start the annuity. But we also know someone's going to be contributing systematically, whether it's monthly or quarterly or annually. The annuity is going to grow over time. The way the product works specifically is when money comes in, it sits in a fixed account that has a guaranteed rate of return until that contract anniversary, where it is then allocated to the index selections that were chosen at the point of sale. So it's not exactly dollar cost averaging, but it is to a certain extent, because then what happens is you have the ability to reallocate based on the market performance of those indices and choose where you want that money that's sitting in that fixed account to go. So I think, we believe we've solved that problem, and, we allow people to come into that product and build that nice nest egg over time that's then convertible to income.
Yeah, what Lesley's describing is really changing the ownership experience of an annuity. And this is what we want to do. We want to change the owner experience of annuities, of life insurance, of investments, of 401k participant accounts, to bring that, succinct, clear income focus.
Yeah. Well, this has been great. We're close to the top of the hour here. Bruno, do you have any last questions or thoughts for Lesley or David?
Go. I'm clearly bullish on that. I don't think I need to overemphasize, but yes, please.
Shall I get you an application?
No, it's all good. No, but I think it's what you're doing is amazing. I think it's going in the right direction, and it's filling one of the most fundamental need that is out there. We talked about it. It's a little discouraging. It took too long to get there, but I think that we're in a good position to see the light at the end of the tunnel. So yeah, go.
Yeah. So I have a question for David and for Lesley. David, so what's next? This is great. What a good product.
Okay. I know my history, and I kind of like jump around from new development to new development, but I'm remaining focused on this for the foreseeable future. We're going to launch annuity, then we go into life insurance, and then we want to go into the plan business and bring the same concept everywhere. And that's how we get through partnerships, I think, to the millions of personally owned defined benefit plans.
Yeah. Well, this is good. But listen, I think it'll be great. You're going to be a great partner for the company. Lesley, I just have a little different question for you, but one that's usually pretty easy for people in our business to answer. Why? Why are you in this business? What motivates you to do great products like these?
Well, to serve our members. Our company is a member-owned organization, so we care about the people that buy our products, and we want to serve them in the best way possible. And we think that there is a underserved market, and we want to bring in a lot of new younger members that can benefit not only from our product, the defined benefit annuity, but also all of the benefits that come with being a part of GBU Life, which is, a fraternal benefit society, which is a bit of a unique animal out there. And we believe that some of the offerings that we have, both from a member benefit standpoint, as well as some really amazing programs through with scholarships and giving back to the community, that will appeal to that generation that really could use our help the most. So it really is about, we care about our members, and we want them to be happy in retirement when they get there, but also live a long life and enjoy the benefits that GBU can provide along the way.
Yeah, well, thanks so much for all you do, and it sounds like your company is on a admirable mission, and we'll look forward to watching the progress of your rollout here.
Well, thank you.
Anyway, listen, David, Lesley, Bruno, thanks so much for joining us, and I'd like to thank our listeners, and be sure to join us next week for another episode of That Annuity Show.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Spotify, or wherever you get your podcasts. You can also get more information or listen to more episodes at thatannuityshow.com. Nassau Financial Group is always working harder to be your carrier of choice. We build products that help protect people's savings and are dedicated to providing you with best-in-class service. We seek to keep things simple and have your back in the years to come. Nassau is headquartered in Hartford, Connecticut. Learn more at nfg.com.
Zinnia, an Eldridge Industries business, simplifies insurance. It delivers comprehensive solutions for the industry's most critical needs and creates the modern rails of the insurance industry. To learn more about Zinnia, please visit zinnia.com.